Welcome to the Indices, and here we're looking at the US notes, the 10-year notes, and on a daily chart. And yesterday we were looking for a move down through here. Now, this is obviously going to continue down through here now. I was expecting a little high to come in here first and then down, and I just want to go back over that particular point because yesterday we were looking for wave 4 to come in through to here, and then wave 5 to move in through to here, but it just failed at the 25 here. So I've had to adjust the account from this particular low through here to have this is the A wave here, the B wave here, and the C wave here in 5 waves to the upside, and that's a perfect fit coming back to the 61.8 retracement level through here. It just throws this count out here somewhat, but the main point is that we could see this move up, testing supply here, and rolling over from there. So this continuing to move down through here and make new lows through here will only strengthen the stock market, and that's pretty much the case here as well. So looking at the S&P 500 here, just on the daily chart here, the psychological finishing line up at 2000 here is still yet to be reached, and we're working through group 2 here at the moment, but there is more wave count for this to move up through here. And in the intraday here on the 2 hour here, we're looking at counting 5 waves from this particular low through to here, and it appears that that we can have wave 1 here, wave 2 here, and wave 3 is not completed yet. We will need to see another little move up through there. Wave 4 can pull back to the wave 4 of 1 lesser degree back into the 1972 area, and then a move up through here as well. So just drilling into that a little bit further through here. It's probably a bit easier to see it on the cash market, but we trade this market, so we need to look at this as well. So looking at little 5 waves up through here, that's how we've got wave 1 and back for wave 2, and I believe this is all of wave 3 here, a 1, a 2 in here somewhere, all the 3rd wave here, the 4th wave here, and a 5th wave up through to here. The main point to understand here is this market climbing higher through here and should stay above the 1965, so you'll need to keep stops below that if you want to get up into this area up through here. The US 30, it's the same but slightly different. We are working with a large number here of 17,000, so we're looking at the classic trading levels pattern. You can view it in Elliott terms as well, the 3rd wave, the 4th wave, the 5th wave, the A, the B, and the C, and then moving up from there. But it's good to understand the classic pattern, because if you understand that in a general sense, then you don't have to get lost in the wave count. And the general pattern is the arrival, the reaction, looking for support, then the first high above the level that we don't chase, and then we're looking for an A and a B and a C, just a 3-wave swing. Then we look for support here, get a reference point here or here, and these are the ones that you add into as you're moving to the upside there. The DAX is the same as the S&P, probably a little bit more sluggish because it's a little bit sort of lower, hasn't taken its highs out here yet, but we're looking at this as an A and a B and a C wave here. The move up here has never really been a good impulse wave. I've always been a little bit concerned about it, and this is the point where we need to be concerned about it actually, is the 61.8 retracement level, the current high at 99.36 I think it is, or somewhere in there. So it could fail from here, doubtful, but there was certainly resistance there as well. And this is just the count that I've got for it. So I'm labeling it as wave 1. I always put the primary count to the left and the alternative count to the right here. But still an A and a B and a C wave up to here, completing here shortly. So this is the 61.8 retracement level here. So we do need to be a little bit careful here. We should be okay, but just need to be a little bit mindful as such here. But look, building the trade in on 9.9, and when the top of group 1, which will be 99.30, once that becomes the retested support, then that's the key element for this market excuse me, to work higher from that point. So that's something to build the trade into. But we're long in these markets. If you need the stops and the entries, we'll then look at the text. But we'll continue to move high, because this should take out the, if we're on the right track here, then we're looking up here. We're looking for a move to take out these highs here. But if we can get close to the 10 here, that will be fine. The FTSE as well, in the bigger picture, we're basically looking at this, this huge sort of correction from here, and we're looking up at 7,000 here. So we've built trades into here, and we'll continue to build trades into here. This particular wave count has got more, has got the right look and feel about it, more so than the DAX, but they are the same. But yeah, so we'll just continue to build through group 1 here, 10, 20 and 30. Once support's on top of 30, group 1, we can move higher from that point there. And just looking at this here as well for the FTSE, it's up for 1 here, back for 2 here, and this is the third wave moving in through up here with 5 waves in at the 1, 2, 3, 4 and 5 here. It can pull back to the fourth wave of 1 lesser degree, which is 67.90. It's also the 38.2 retracement level as well, taken from this current high here as well. We're going to keep the stops out of the way though at 67.63. Because if there is a wave 4 here, we don't want to be taken out by a spike such. So if we do get this here, we should be pretty safe here. Do you know what I mean? So whatever happens here, we can just continue to build into it, accommodating more risk, of course, but it's just a safer bet. That's all. Right, the Australian market. Just before we start talking about this, though, the 4th of July, which is the Friday, I believe, is the holiday for the US. The non-farm payroll figures, the employment figures, normally come out on the Friday. I think they're coming out on the Thursday tonight. But because the ADP figures in the last session for the US were positive, very positive, that means that the non-farm payrolls or the employment figures should be good as well. So that will help continue the trend to the upside. The Australian market here, I don't really have a clear count. I can share what I know and what I don't. This particular low here was a low below this one here on the cash market. So it is really this point here that's important. So realistically, this wave 2 or wave C can come over to here, but I'm not that fussed about that yet. What we do have is we do have 5 waves up here, and I don't want to throw the bearish count away just yet. Right, so this move down through to here, the 61.8 retracement level, is basically where it is right now. Okay, so it can be a bearish corrective rally retesting supply at 5,500 or thereabouts, and fail from there. So we just need to be a bit mindful of that. So this would be the A, the B, and the C wave here in 5 waves, fail, and then roll over from that point there. That's highly possible. So we need to keep that in mind for the moment. Also, from this little move here, the move up through here is also in 5 waves as well, and we will look at that in a moment as well. So in both cases, being a C wave will be in 5 waves. And also, if we just take it as a positive situation where we have this end of the correction over here, as such, then in both cases we're going to see a sell-off from the 5 waves here, because after 5 waves you get a little A, B and C here that can pull back 50-60% of this move here. Normally we would be looking at the 5,500, but in this case, because we've got these tops here, we need to be looking in the group 2 area through here. So in both counts there will be some reaction at group 2 here and or 5,500 here. Thursday in the bullish weekly cycle is normally the corrective day that can open higher and then close lower for the day. But as long as it closes on lower volume than yesterday, then it will be a corrective pullback. So in this particular structure moving up through here, it's quite obvious to see the third wave in here, okay? So from here, we've got 1, 2, 3, 4, 5. So we're calling this 1 and 2 in here. The third wave could be the 1, 2, 3, 4, 5. It could be into here somewhere, but I've just left it here because it's the biggest correction. And then we need to look at this being 5 waves up through to here. So taken from the top here, the 50-60% retracement level is back down through here at 54.10 and 54.20. The midpoint for this particular market, the 54.50, which is this one here, it normally plays a strong role. So we know that the support is here. So if this market was going to pull back in A and a B and a C, we would be looking to 5.440 area as a sort of a, not as a minimum, but as a probable situation, because we can see that the FTSE is still moving to the upside and the US markets are still moving to the upside. So what you need to figure out is that, are we going to correct from this little area through here in 3 waves, or are we going to do it from here in 3 waves? That's the thing, that's the challenge, so to speak. But what the other thing that we're looking for here is it's kind of good if we do get a bit of a correction today, Thursday, because that will leave us with Friday and Monday being bullish days. It would be nice to have the US markets operating, but the FTSE should be able to do the trick for us and take us higher above that 5,500 there. So possible corrective pattern today, and bullish pattern on Friday and Monday running through to Tuesday. There's quite a few announcements today as well for Australia. We got the RBA, Glenn Stevens, having a chat at 11 o'clock. We've got the China non-manufacturing figures also at 11 o'clock as well. Building approvals at 11:30, and also retail figures as well. So there's plenty of news to swing this market around a bit. All right, thanks for listening.